Let's start with today's special on the consumer as McDonald's announced they're extending the $5 value meal into December in most of its U.S. markets. One of our next guests says this will keep the fast food value wars raging till year end. While quick service restaurants battle internally, our other guest says another group of restaurants could be winning in terms of stock value. Joining us are Jonathan Mays, editor-in-chief at Restaurant Business Magazine, and Andrew Charles. He's an analyst at TD Cowen. Welcome to both of you. Jonathan, starting with you, to Tyler's point earlier, is this an offering that has worked well all around, or are there any who will be hurt by this, the franchisees namely?
You're going to have franchisees in some markets, particularly high-cost markets, that could have some issues with this particular deal. But it's kind of the reality that we're in right now is restaurant operators probably have to donate some margin over the next year or so because consumers really need this sort of value today. But yeah, I mean, you could see certainly some franchisees in California or some high cost markets that could be hurt by something like this for sure.
Andrew, what do you think of McDonald's, the stock?
Hey, Tyler. So, yeah, we think that with McDonald's, the stock, there's better opportunities elsewhere in the sector. I think the call for McDonald's is really that as we look at the value environment that Jonathan was just touching on, frankly, we view it as noise. We think this is going to drive some market share gains within quick service, but not really lead to trade down otherwise in the industry from fast casual. And so for McDonald's, it really comes down to how much can they pump out these on-brand marketing and menu innovations. So what I mean by that is we had the collector's cups in August that seemed to resonate and drive some success there. Going back over the brand's success from 2020 through 2023, they were just a machine, pumping out things like famous orders, the adult Happy Meals, the Grimace Shake. We need more of those. And so on tap, we've got Chicken Big Mac, we've got McRib. Frankly, it comes down to how quickly and how much marketing budget they can put on these to really help drive and overpower the underlying softness in quick service that they're not immune from.
Andrew, I take your point broadly speaking. Obviously, that's what's going to work. But to me, almost the poster image of the inflation a lot of consumers have experienced in recent years was the $9.19, I think, 10-count McNugget meal. I mean, nobody wants to pay almost $10 for chicken nuggets, fries, and a soda. And McDonald's, to me, clearly has to dial that way back if they want to just be perceived as a place where people can go for that everyday meal.
Yeah, so Kelly, I agree with you that, look, within quick service, it's always about a three-legged stool between value, menu innovation, and operations. Our concern is that McDonald's is going way too deep on value while ignoring some of the other big things out there. And so we're most excited about chicken strips that our checks are telling us are going to be coming sometime in middle of 2025. We think that's certainly on brand. It's something that said their competitors they could use more of. And so I think they're going too deep on value to solve this problem. That I think is probably more detrimental for the franchisee profitability. I mean, if you look at our model, we think the McDonald's franchisee profitability probably down this year, really not boding well for their narrative to try to get development accelerated in the U.S.
So, Jonathan, take us through the discussion of quick serve versus fast casual and who's winning there and why.
Well, I mean, it's a pretty fine line between quick serve and fast casual, but what we would consider to be fast casual is absolutely winning right now, without any question. You've got Wingstop is doing 45% same-store sales on a 2-year basis.
Wow.
To put that into perspective, that is higher than the 2-year number that Popeyes did in the fourth quarter of 2019, which, if you recall, was the quarter they introduced their chicken sandwich. Wow. Wingstop just bested that. You've got Chipotle, which despite all of this noise about its serving sizes, still did 11%. You've got Cava is really killing
Cava's
it.
on fire, the stock.
They're completely on fire. The privately held Raising Cane's.
Raising Cane's, my son's favorite place now. I hadn't heard of Raising Cane's 2 years ago.
They're ridiculous. They do $6+ million per store, and all they do is sell chicken fingers. That is it.
It's all about the sauces. It's all about the sauces. Yeah. Even Sweetgreen, a salad concept, and it's more niche. But Jonathan, to your point, there are a lot of concepts that are winning right now. I come back to the price. Why would I pay $10 for chicken nuggets, fries, and a soda when I could go pay $15 for Chipotle, Cava, or Sweetgreen?
Well, I think that's exactly what's happening. I think a lot of customers are saying, well, I'm not going to pay these prices. And so either I'm not going to eat out at a fast food restaurant, I'm going to go to a convenience store, or I'm going to just eat at home with food I bought from Walmart, which is definitely happening. Or they're saying, I'm going to get something a little bit more. They're going to go to Chipotle, they're going to go to Sweet Green, they're going to go to Chili's. Chili's did 14.8% same-store sales by essentially telling customers that they are a better value than fast food.